Hi, Matt McAleer, Director of Equity Strategies, June 4th, just after the close. Here with John Mousseau, our President and CEO and Director of Fixed Income. I'm just going to try to talk about a few things that popped out to us this week. Equity markets, good steady bid. Energy again. You know, go back 14 months to April of 2020 when the barrel of oil broke under zero. Such supply on the market into that teeth of COVID with nowhere to deliver it to. And now we look at today. Keep in mind, commodities, the ultimate supply and demand market. With that kind of supply, producers forced to shut in production. And today we're at $70 a barrel. Right now, that hasn't been enough to slow down the economy. Although, in terms of interest rates, with the 10-year at 155, 156, maybe the bond market's telling us that we're at peak economic activity. Who knows?
Right.
And back half we moderate to a more normal setting. You know, one thing's for sure. The Fed announcement this week that they were comfortable selling the corporate bonds that they bought last March and April into COVID got everyone's attention because it shows some confidence.
Absolutely right, Matt. And it was a crucial, another piece of evidence that COVID is in the rearview mirror as far as the economy goes. This was a $5 billion program. Corporate bond markets were a mess last year in March. The Fed stepped in. They learned lessons from '08, so they didn't mess around this time. You had a $5 billion program. The most important thing that it did was send the confidence to the bond market, which repaired itself. And just as importantly, they're saying, we don't need the facility anymore right now. And by the way, the market will gobble up that supply out of that facility very easily.
You think about the strides the Fed has made in the data they can review versus 2008, right?
It's unbelievable.
It's a ongoing process, as risk management is, and the Fed is our chief risk manager of the financial system.
Absolutely, and they have become a self-learning vehicle.
Yeah. Thinking back to '08, I remember going home one Friday with money markets breaking the buck.
Right.
4 or 5 of them on that Friday, with the thought that the next week would have hundreds of money markets trading below $1.
Right.
And they jumped right in front of that this time.
Exactly.
Solved that puzzle. Sometimes the Fed gets pushback from whether it's the media or traders that are on the wrong side of the trade or analysts that they feel there's manipulation in the market. But I always think they don't understand what the Fed's job is.
Yeah, you're right. And I think when you look at some of the numbers today, particularly with a jobs number, which some people thought is a little disappointing at a little under 500,000, it kind of reinforces the Fed's steady as we go attitude on this thing. And I think the market kind of bought into that this week with bond yields down, 4 or 5 ticks in the 10 and the 30-year bond, and Munis as well. And you go on to the next thing, right? Next week you have CPI, and they'll tackle that. So,
in terms of what we just discussed with yields staying in, just a quick note to clients: we did pare back on our basic materials position today and our bank position. They've been wonderful trades. They got up on stems, we call them. When stocks run on stems, it never hurts to pare the position down. We can always rebuy it. So that takes our U.S. portfolio up to about 8% cash. We'll see. That may be redeployed back towards growth. Remember, it's been a value tilt over the last 10 to 12 months. Let's see if some of this moderating thought in the bond market, in the yield market, gives growth a bid.
Yeah, no, I would agree with that. And on the bond side, next week, because this was a holiday week with Memorial Day, next week we get one of the first weeks where we've seen a very large amount of municipal bond supply, almost
Finally.
$13 billion. Finally. So some things to sink our teeth into.
We've been begging for it. I hope everyone has a great weekend. We'll see you next week, and I'm sure we'll have some more headlines and market activity to discuss.
And I would add one thing, enjoy the Belmont. My pick is Charlie.
Hot Rod Charlie for you. Boy, that essential quality looks awfully tough. But I'm going back to my Kentucky Derby pick, who got caught in a little bit of traffic and didn't get much done. Known agenda.
Oh, so we'll see.
So we'll see what happens. Have fun. It's a great card of racing, not just the Belmont. So enjoy it.
Have a great week.